Hello everyone, hope we're all doing well. So in this video, I'm going to be taking you through the steps I undergo to make a decision whether to buy or sell, depending on the particular setup or security that I want to trade. Of course, using the same things that I've been sharing with you guys on this channel of ours. Now, the method we use is top-down analysis. Now, someone may be wondering, why do you insist on someone to use top-down analysis? Say I can only use one time frame to get what I want. Now, the following are the reasons which I can actually give you to actually stick to top-down analysis. One, it's going to save you from a lot of noise. You see, there are some time frames that have too much noise that may make you make or do funny or little mistakes that you could have avoided. Then secondly, also to determine proper risk to reward ratio. Now, one of the mistakes which we shall be speaking about in the upcoming videos is that people do not know how to set proper risk to reward ratios because they don't know how to set stop loss and take profit. You're using different time frames, using wrong time frames to set a stop loss, using wrong time frames to set take profit. So we shall be speaking about that. So top-down analysis saves you from that. You determine a proper risk to reward ratios by placing stop loss and or invalidation. Some people don't use stop loss, but they use what we call invalidation, right? So the third one is confidence. When you do top-down analysis is simply like asking a fellow trader that, hey, what do you think of this? So these different time frames that you're going to look through will be telling you if you see that the structures that you're seeing or the movements that you're seeing in different time frames are similar, they're all pointing towards the similar thing. You have confidence, or you'll gain confidence to say, okay, I'm doing the right thing. And you know very well confidence is very important in trading. So I'm just going to first state down the steps that I do follow, and then we'll go through them. Of course, using one of the examples I've shared with you. The example I'm going to be going through is Nasdaq. I've shared Nasdaq when it was still down here, but of course, my rules tell me that I'm not supposed to trade when there's a pattern that has formed. I want to trade when the market has taken out that pattern. I usually don't like to trade before it's being broken. That's my rule. I'm not saying you should copy it, but of course, I won't share with you what I do. Then you'll decide. And also at the end, make sure you watch until the end. I won't share with you because I won't share with you how you can design your own way, because how I trade may not be suitable for you. Are we together? So make sure you stick until the end, watch until the end. In case I'm very fast, because I don't want to make the video so long, you can just slow down so that you can watch properly as you take your notes, right? So we looked at Nasdaq ever since it was down this side, and then we said we have a target up that side. So I'm going to take you through, if you want to take a trade from here, in case you want to, you're a type of trader who trades at the bottom of patterns or when patterns are still forming, you could have taken a trade from here. Personally, I would not have taken a trade from there. That's why you see I have entries here now. I have two entries. One of them hit a stop loss. I'm also going to be taking you through why this trade hit a stop loss. And also I have one trade currently running, right? So the first step that I normally do is I determine direction. Now, the time frame I normally use, I don't know if I can stress this enough, but the time frame I normally use is monthly. Now, people normally say that you're marking things in monthly, weekly, and the rest, your chart is going to look dirty. No, I've showed you guys this over and over. You don't need to have all those things. Monthly is just giving you direction. You can mark your levels to determine. After, you can delete them. You can use weekly to mark your direction or get a structure after you delete it in case you're not going to use it. Because at the end of the day, we don't take trades in these bigger time frames. Are we together? So first, I get direction. Then secondly, I identify my area of interest. Now, area of interest is gotten from a structure time frame. Structure time frame, we have two. We can use weekly or we can use daily. But this is not a must. Like I've told you at the end, I'm going to be showing you how you can design your own way of coming up with these things. So make sure you stick until the end, right? And then thirdly, after identifying my area of interest, before I go to identify where I want, how I'm going to take my trade, or to wait for a change of trend, I have to make sure I'm keeping up with the fundamentals of that day or sentiments of the market makers of that day. So I'm going to show you the platform I use to keep myself updated, right? To follow up what are the major events that are coming up and the rest, right? Then I check my change of trend and entry time frame. I love using H4 because of my big structure, and sometimes not sometimes, I'm a swinger, so most times I take trades and hold them for some time. In case you've also seen how I analyze and the setups that I do share with you guys, you can clearly notice that I hold trades for some time. Then after that, we're going to be looking at the entry. I've shared some couple of entry models that I use. The exact models, there's nothing that I am keeping that maybe there's something secretive. No, everything that you need to know about trading is here. The only difference between me and you is experience, right? I've traded for some time, and also I've backtested my rules over and over, and I stick to the same things. That's the only difference, right? So without wasting time, I'm just going to use a different a different chart of Nasdaq because I'm still using this one. I don't want to delete my levels. So I'm just going to use, I like using Oanda because this one is 8 cap that I'm using to follow up my trade. So let's go to Oanda. I think I have it somewhere down here. It's here. So it's the same chart. Don't say that it's different. It's the same chart. Just I didn't want to spoil my thing. Now, remember we said we are starting with direction. So I'm just going to go the monthly time frame. Now, in the monthly time frame, I'm just going to backtest. Allow me to backtest because I'm showing you exactly how the other trades were taken and they were shared. You can check through our platform. Someone may be saying, "Oh no, you're speaking about something that happened. You're just replaying." Yeah, some people have issues with replaying when someone is showing you what you could have done. So if you check through the setups that we shared, we spoke about Nasdaq when it was still having this impulse. We said that there's an impulse, and we said in our lessons, I repeat this over and over. By now, at least you should be knowing these rules. If you see an impulse, and by impulse, what do I mean? By impulse, I mean that the market has broken more than one turning point. For example, here this market broke this turning point. It broke this turning point, broke this turning point. This is an impulsive move. When there's an impulsive move, kindly bring out your Fibonacci retracement tool and mark out your areas of, and mark out your areas of what? Mark out your areas of interest. For example, now this is monthly. I'm not going to use it for area of interest or what. I'm going to mark this area here, but I'm also going to use it for direction. Why direction? Because I know that the market has to come down, then goes up. So you can decide to delete it, right? Then you start marking your levels from the structure time frame. Like for example, I use weekly, like I'm going to show you. So I'm just going to mark this. Now, personally, I'm not going to start from weekly. I'm going to start from monthly. I'm just going to adjust in weekly. So I've gotten my area. This whole area here, you can mark it. Remember, we have in the lesson of Fibonacci, I taught you to mark this level, this level, this level. You can also mark this last one, but these three are the most important ones. So this is an area that is going to be of interest. Then this is going to be my target here, just slightly above. We all know Nasdaq is always an uptrend. So I expect it to make a new high, just slightly. It will go higher. I expect it to go about 18K. Of course, I'm not a market maker, but that's what I expect, right? So I know that my direction is sorted. I know it's supposed to come down and then it goes higher. So you know what you want to decide, what you want to do in the market. Either you're going to come down with it into this level, or you're going to wait for it to touch this area here, then you go up with it. You've already determined your direction, so you're not going to gamble. Now, the next thing for us to do is to go to our structure time frame, which I've told you I use weekly. So I'm going to come to my weekly time frame and adjust. Now, also in weekly, you can clearly see in this movement up, we have impulsive moves. It is up to you to decide. So if you're to draw using your Fibonacci, remember we talked about Fibonacci and the rest. If you draw using your Fibonacci, you realize that we actually have levels slightly above here. So I'm just going to adjust, right? You can adjust here like this, right? Now, also here is when if you use different methods of trading, like you trade using fair value gaps, you trade using discount levels, you want to trade, those things, you can apply them here now, right? Because this is now our structure time frame. We're determining our area of interest. Now, for example, here you can just shift it above and identify that we have maybe a level of imbalance here whereby the market did not test, or we have this level that was not tested and is aligning with what? It's aligning with our first Fibonacci retracement level. So you can clearly see these things are okay. Actually, you can use it as a correlation. So personally, I would be waiting for the market to reach here because I love trading continuations. I've stressed this many times and I've mentioned it several times, right? So I won't be waiting for the market to touch here. If it doesn't touch here, I'll not trade. I'll not take that trade, right? So I've identified my area of interest. So the market has to first touch here. And I know that my ultimate term target is this one, which I marked in monthly. So you can clearly see that I've used monthly and weekly, but my chart is still clean. You know, people normally say, your chart is going to be dirty because you're looking at several time frames. No, you can clearly see my chart is still very, very neat. Are you seeing? So remember, we've said that we're going to wait for the market to touch our area of interest. Now, remember we said direction, area of interest. Then before you take entry, we have to identify that, of course, first the market has to touch. Let me just replay here quickly so that the market first touches here. So now when the market touches your area of interest, it's not that you're going to just start buying. No, you have to look for a change of trend, which you do in the entry time frames. I've mentioned H4. But before we go to identify area of entry, I said you have to make sure you keep up with the fundamentals of that day. You have to check what the market makers are doing. And the platform that I do use is called Fast Bull, right? So you can just go into your browser and put in Fast Bull, or I'm just going to leave the link in the description. Make sure you also, they have I discovered they have an application. Some people prefer checking things quickly on their phone because remember here it's like trade management. You're checking how the fundamentals of that they are doing, or the sentiments of the market maker. So you can just go into your browser, put in Fast Bull, or you can use the link in the description. Now they have economic calendar. In case you want to check the events of that day, you can go to the economic calendar. But we are going to go to the website and I show you other things that you can use that I normally use personally. So you can also check the traders' orders and positions. You can check the financial market analysis. Also, they have people who can analyze there. You can compare. Remember, in trading, you need to share ideas with like-minded people. You need to create confidence. Like I've showed you, the one way is doing top-down analysis. Then secondly, you can ask other people who are trading. Then another one that personally I like doing is checking the orders of the big financial institutions, which also you can find under Fast Bull, right? Now, let's just go and check how the website looks like and how I want you to use it. So when you open the website, there are very many things. The economic calendar is here. You can click and check the events of the day. You can filter out. If you want to filter out the time according to your country, you can screen out the countries that you would like to trade, right? Then also you can check the impact of the news. Personally, I like using or focusing on news that has 3 bulls or 3 stars, right? So since we're just going through something that already happened, but I'm taking you through the steps that I took to do that. I'm not going to go through today's thing because this is something that already happened. So I'm not going to focus on the calendar. But I just want to show you the process, the entire process that I undertake, right? So you can look at the calendar, you can look at the analysis, right? If you want to look at people's ideas, maybe the analysis that also other people are focusing on, what they're talking about, maybe GBP USD, Euro USD, some of the most traded things. Then also if you want to check what other traders may be doing or what signals you could be using, if it's aligning with yours, you can come and check the signals there. Then also if you want to follow up news, right? If you want to keep up with news of what is happening fundamentally, remember there are 3 types of trading: fundamental trading, sentimental trading, and technical trading, which is mostly used, right? Now, what I am so much interested in when I come to this is, one, economic news. Then secondly, you can see the economic calendar is here. You use the economic calendar for news. Now, like I've said, you can check these signals and see if it's aligning with your setup, right? But also check the analysis from these people here. But what personally I'm so much interested in is the economic calendar and also the institutional data, because this data here gives me how the market makers are doing. And I like using the information that comes from the CFTC, right? Now, if you don't know what CFTC is, this is a very big body in the US that governs a lot of futures trading and the rest, all right? Commodities and futures trading. So I like using that, but I'll make a whole video about this, and all this can be found here. This is one that I love using. Then another that I like checking is the rates. What are they going to increase or decrease rates? And I'm interested in checking the dates. How was the past performance of this and the rest, right? So after checking all this information and putting together, knowing that at this time, such and such a thing is going to happen, on this date, there's this. So I know that even if I go back to my chart, I'm not going to be gambling, right? I know exactly that at this time, this and this is going to affect. I know that the market makers using the CFTC information that I've checked on that website is all aligning with the position I'm planning to take. And then after that, I go now to my entry time frame. Now from entry time frame here, I just spoke about in the previous video how you can identify what a change of trend looks like. So I'll just come to my entry time frame and I look at how is the market pushing down. Now in this case, you can see the market is making lows, lower highs, lows, and lower highs. So our last high was this one here. Remember, if you want to take a buy, we're going to be interested in a market taking out this high here, right? So I'm just going to change the color so that we don't get confused. So I'm just going to wait for the market to take out that high. Still failing. Now, this already shows you that this level here is very significant. The moment the market takes it out, you know that your chances of the stop loss being taken out is very is very minimal, right? So this area rejected price here, and again rejected price here. So if in case this is the third time, in case the market broke above on a weekly test, right? Then you can take your trade, because this was the last lower high that the market printed for us, right? So This is going to be my area of entry. Remember, this is my area of interest, the blue one I got in my structure time frame. This is my area of entry. I've gotten my entry time frame, which is H4. If you want to refine, you can now go to H1, but you don't refine before the market breaks above and on the retest. That's when you can refine, right? But I'm not going to be doing refining. It will make the video so long, right? So let's just see how the market behaves here. Not yet broken, not yet. You see it's reacting. Let's see. Not yet above. It's not yet above, right? So the market closed above with this candle here and then came back inside, right? Now, some people who are risk takers, they just like to take trades immediately closes above, right? But personally, I do advise that you take a trade after it comes back to retest like now. If you're a type of trader who takes a trade after it has closed just like this, it means that your risk to reward ratio sometimes is going to be very, very medium, right? Not very high favoring you. So after identifying my entry, remember I already have a target. Now, the next thing for me to do is to identify my stop loss. So I'll just go to daily. Remember, I used weekly for structure, then I used H4. Now, I'll go to daily to identify levels that the market could possibly come back to retest. Now, in this case, I have this level here. So this area here that the market did not retest, right? That is close to where the market turned from. I know most of you say that my stop loss should be here, but no. It can't be here because there's a level the market didn't test. You see this area here? Getting it? So the market can easily come and test. And this is where you guys mostly, they hit your stop loss, then you're kicked out. So my stop loss will just be slightly below here. Someone will say, but hey, but the stop loss is big. Yes, the stop loss is big, but also I want you to look at my target, right? Look at my target. It's over 1, 2, 3. So this will be my target, just slightly below here for psychological reasons. Are we together? So this is our first entry. Then we go back. This one is already set. Now, when you come back here, this is for people who wanted to trade before. But remember, I told you that I don't like trading when the market is still in a pattern form. For example, here, the market was still in this pattern. So I did not trade. I wanted to trade when the market breaks above. So again, I'm going to show you another entry above here, right? How I took my trade from above here. Just these trades that you're seeing here. Someone may be saying, no. You can see that I took them above when the market broke above here. This is why you see my entries are here. And I hit a stop loss first. I'm also going to show you the reason as to why I hit this stop loss. And then this is a running trade that I have. So let's just go back there and we see. So, sorry, the thing already moved. I think I pressed on the tool. So the market already moved up here, but let's just go back to how the market broke above here. You can clearly see that here, the market, your stop loss is very safe, and the market moved in your favor, yes, but you're very safe. Even if the market was to come back and decide to retest these levels, your stop loss is below, right? I know it depends on the account size, but also the lot sizing, position sizing is very key, right? So now let's go back to the daily time frame, and I show you how I was stopped out in that trade. Now, what did I observe? I observed that actually the market had broken above this area here. So I came and I marked this level here that the market had broken. And I was interested in the market coming to retest. And indeed, the market came and retested this point here, right? So I went to my H4, right? So in H4, I was waiting for the market to come back to retest this point here, and then I can take my trade. So let me just show you. So when the market came back here and lost momentum, I'm a momentum trader. So what did I do? I took my trade and placed my stop loss just slightly below somewhere there. You can see you can just go back and check the image I showed you, and the market moved properly. That's why you see I had an arrow showing you that I expect the market to break above, then it comes back to retest that area broken. But what happened is the market aggressively went and hit and triggered my stop loss because they know that most people are trading below this, are trading at this level here. So they wanted to trigger most people's stop losses before moving, which I kind of realized I had blundered because the market first triggered my stop loss at this point here. But then again, I took my entry using the same rules. You can see the market here was trending downwards, making lower lows, lower highs, lower lows. So you use the same rules again. When the market reacts and breaks the last lower high, then you can take your trade, right? So above here is when I took the current trade that is running. You can just check again, just for the purposes of saving time. I'm not going to go through that. I took the trade around here above this point here. You can just check. Sorry, let me just delete this. I took the trade around here, right? And still I'm targeting the same place, but this time around my stop loss was slightly below this point here, slightly below this area here, because I knew that the market now has tested every level. There's no untested level that the market could be coming to. I'm still targeting the same area because this is the ultimate target that I got in the bigger time frame. So this is exactly the process that I use to take my trades every time that I want to take a trade. Of course, most times I do it over the weekend. Someone may be asking, when do you do this analysis? You need to have your market watch list that you prepare over the weekend. During the week, you're just following it up. In case you want to do intraday, maybe here and there, because sometimes also I do intraday, right? Because when you're doing swing trading, sometimes trade opportunities take very long to present themselves, but you can keep seeing intraday opportunities. You do the same process, right? To observe the opportunities that you want to trade. Now, I said when I was starting the video that I'm going to help you to identify, in case my time frames are not favorable for you, but the steps are the same. Identify direction, area of interest, check news. We use Fast Bull. Personally, I use Fast Bull, which I also recommend you do because it is very detailed and it gives you a lot of things. For example, institutional levels and the rest, because this is data. Most of you think that institutional levels are just on the chart. No, these guys don't use this chart. They don't even use candles, right? Maybe some hedge funds here and there may be using these candles, but most of them, even that I've checked, like using the line charts and volumes, right? So the candles are mostly used by us, the retail traders. Are we together? So information is important to them because they're getting data from CEOs, they're getting data from people around countries. So you can check that on Fast Bull. Then, so let me take you through the process. How do you identify your direction? In case you feel that monthly is very big for direction, you can use the daily time frame. Then you can go to H4 to identify your area of interest. Now, since you're using H4 as your area of interest, you can also use H4 for area of interest, or you can use H1 for area of interest. Now, when you use H4 for your area of interest, make sure you skip one time frame, meaning you're skipping H1 and you're going to use your minute 30 for entry. Then you can refine in minute 15. Are we together? If you're using H1 as your area of interest, you're going to skip 1, which is minute 30, and use minute 15 for your entry. Are we together? Then you can refine in minute 5. This is the model most people use, but they don't even realize how it comes about. Are we together? So you can use daily for direction. Then you go to identify structure. You can use H4. Then your entry time frame is minute 30. You're skipping H1. Why are you skipping this? Because you want to give yourself enough room to observe. Because I mentioned something to do with many candles within a given period of time. So in this case, you will have fewer candles and you'll fail to identify. And also your risk reward ratio will be very bad, right? So you skip one time frame. If this is your structure time frame, skip one time frame, which will be minute 30. You can refine a minute 15. If it's H1, where you're getting structure from, skip one time frame, which is minute 15, and you'll be refining in minute 5. Are we together? This is the model most people use, but they don't know how it comes about. So this is how you can devise your own, and make sure you backtest. TradingView gives you this tool here. Go back in time, backtest. Follow the things that we're teaching you here and backtest them. You're not going to become good because you're just watching our videos that we have posted once in a while. You have to do it over and over. You have to do it. And also watching is one thing and doing is a different thing. You become better at something by doing. So in case this video made sense to you, make sure you give us a thumbs up button so that it can reach also most people. And then also, in case you've just come across our channel and so it's your first time to view our content, we do produce such content on a weekly basis. So do not forget to subscribe. Have a great time.